Hi everyone, good afternoon, and thank you for joining this afternoon's Cuppa Club with Tim Rooney, CEO of Salad Money. My name is Jerome Heusinger, Senior Development Manager at Ethex, and we're supporting Salad Money's third bond offer on the platform. So Tim, please welcome back. Please introduce yourself and give us a very top-line explanation of what Salad Money does.
Sure, thanks, Sharon. Hello, everyone. My name's Tim Rooney. I'm the CEO of Salad Money. We are now the largest consumer CDFI lender in the UK. We have successfully lent over £160 million to over 110,000 customers. And as Sharon said, most of those customers have been unable to access mainstream credit products due to impaired credit and therefore a poor credit score. We've used open banking solely to make affordable and appropriate lending decisions, and we are striving to become sustainable and profitable, which we hope to be later this year. And it's been a tremendous journey using open banking, for which we've won many awards for serving a population. We are part funded by Fair for All Finance, who are the government distributor of dormant assets, and we've received over £12 million from them to fulfill our purpose. They also hold a golden share in the business, which keeps us to our cause and means that we have certain social covenants that we need to maintain, and also lending covenants in terms of the people that we're serving, and also the amounts that we can lend, the interest we can charge, and the periods over which we can lend.
So Tim, you've previously raised over 1.2 million through your bond offers on Ethex. Can you tell us how this money is being used and what impact it has created so far?
Sure. So the money that was raised in the previous two offers was used specifically as junior capital to match the senior capital funding we have to lend. None of the funds that were raised were used to deal with any of our OPEX or development elements. It was all junior capital to fund the senior capital and the lending that we've done. In the past 12 months, we've lent over £60 million with that junior capital. So the 5% junior capital that's required, which is raised from bondholders and other sources, goes into a pot, and we can then borrow up to 95% from our funders. So a small amount of capital is reused numerous times within our funding cycle. The loans are typically £1,000. They are 12 to 18 months duration, so it's very a very fast turnaround for those loans, and the money is recycled each time.
Say a little bit about the composition of your customer base. Who
are the customers?
Who is the typical customer?
Okay, so we always
what can you facilitate that they couldn't get elsewhere?
Okay, so our typical customers are people in employment. So we're looking for continuous employment within the open banking data. The customers I'd like to describe as customers who spend to their means and not beyond their means. And typically they are, we have a social impact report on our website, which is really insightful. You'll get lots of detail about the sort of geodemographic details. Typically, 65% of our borrowers are female. They are age ranges from sort of 35 to 55. They have dependents. They are in full-time employment, as I mentioned. We've got about 35% are working in the public sector, but typically these are people in the lower 3, 4, 5 deciles of income, taking home net about £1,500 to £2,500 a month. A lot of those people are supported by benefits, universal credit, and other benefits as well, which we again can access and see through the open banking.
Okay, and what is it about the system that prevents, the banks that everyone will know, the big clearers, from accommodating the financial needs of these customers?
So typically, the customers that we're lending to have an average credit score of 487. Banks will lend to customers with a credit score of 550 and above. 38% of our borrowers have had a county court judgment in the previous 6 years. And county court judgments are an absolute knockout. No, we won't lend to you, regardless of the amount, the size, or the recency. So we look at open banking to see the difference between someone's fixed expenses and someone's disposable income. And then if they have enough disposable income, we will lend to them. And it's really important. Every single one of the loans that we make is affordable and appropriate. And as a result of that, we've had less than 100 claims for unaffordable lending, which have gone to the financial ombudsman. Actually, 18 have only gone to the financial ombudsman. And of those, I think it's 12 were actually in our favour, and the other 6 were not in our favour. But we have an incredibly low complaint rate because of the fact that we use open banking, and we can see that history and the propensity and the ability for a consumer to repay us. We have an excellent relationship with the financial ombudsman and also the FCA. I myself have recently taken up a position on the Access to Credit subcommittee, which is run by Treasury, where I and other lenders make recommendations about access to credit for the population that we serve.
What kind of proportion of applicants don't qualify for lending by Salad Money, and how can you help them? And if you can, how do you help them?
Okay, so the market size, and there are lots of statistics out there, apparently 22 million people are in a category of not being able to access mainstream credit. Now, we sadly turn away about 90% of the people that apply to us because we can't lend to them, because either they have not enough income, they don't have enough disposable income, they are probably indebted to a point where they have no ability to take on further credit. Sadly, some of those individuals have got a gambling problem. In fact, I think it's about 30% of the population that apply to us have excessive gambling. And on top of that, we know that they have a poor credit score because 1 month after we lend or don't lend to a customer, we obtain from a credit reference agency the credit score of that individual. And it does show us that, as I say, most of them have got a credit score of around about 487, which is well beneath a level that prime and indeed some of the near prime lenders would consider.
Okay. In your offer document, you mention a collaboration with Step Change Debt Charity. Can you just elaborate on that?
Sure. So Step Change are one of the largest debt advisory businesses in the UK. They're funded from the sector. A lot of consumers will come to us, and at the point at which we recognise they're over indebted, we do what's called a warm transfer, where we'll take their details and with their consent, we'll pass that into the Step Change network to get them debt advice. We also do a similar thing for gamblers as well. But that new collaboration, which has been running for about 4 months now, has proved really successful. If you can get people in the moment to understand what their predicament is in terms of debt and income and get the right advice, you can hopefully get them into a position where perhaps a debt relief order or some sort of stay of execution from payments can be made whilst they get back on their feet. I mean, it's fair to say a lot of our customers, that they take out a loan with us, and then at some point during the term of that loan, they may have a period of vulnerability where they've had a relationship breakdown, they've got a loss of income, they might have some family illness, they might have some social justice problems. And what Salad does, and we've won an award for this in the last couple of months for customer services. We'll look at the customer, we'll listen to them, and if appropriate, we'll give them a payment holiday to get back on their feet. Now, there's no penalty for that. There's no financial penalty at all for that process. But we recognize the lumpiness of people's income and also the potential for them to fall into vulnerability. And for me, unlike other lenders, we recognize that you have to sort of work with the consumer during the course of that loan to get them back on track. We've actually recently put in a vulnerability assessment tool, which actually records our phone calls, looks at the transcripts and sees and makes sure that we pick up on everything that the customer says that may make them vulnerable. And I'm not talking about loss of income here. I'm talking about other forms of problems that they may have, children, social problems, social mobility problems, losing a partner, those sorts of things. We are looking throughout the journey with our customer at signs of potential problems. And in fact, last year in December, we were awarded an AISP license from the FCA, which will allow us to be the first consumer credit lender in the UK to pull open banking data during the course of the term of the loan. And what we're looking for is to predict the vulnerability of a customer such that we can then assess the payment, make sure that they can afford it, but also come to them before they have a problem. And I think that's really important. I'd encourage all of the lending community to do that.
Okay. Also in the offer document, you mention an initiative around no or nil interest loan schemes. Could you just talk about that and
Sure.
what kind of results and signals that's yielding for you?
Sure. So about 18 months ago, we were chosen by Fair for All to be one of the distributor of NILS loans, no interest loans. So customers who come to us and unfortunately don't meet the criteria that we have, we were able to offer them up to £1,000 loan with no interest. And we ended up dispersing just shy of £10 million during a period of 12 months. We're on the second phase of the NILS program now. We're distributing about £500,000 a month to consumers that would not be able to access credit from ourselves, but would be eligible for this NILS initiative. And what that has allowed us to do, in fact, is to sort of broaden our risk appetite, because those individuals that we lent to have repaid. Some have had some difficulties, but the majority of those individuals have repaid. So that data has been incredibly helpful for us to sort of recut our risk caliber and deal with a sector that we typically would have said no to. It's also worth mentioning that a lot of the customers that come to us, rather than just say no, we actually indicate to them where they don't meet the criteria, and we try and rehabilitate those individuals. 28% of our customers in November last year had previously applied to Salad in the 3 or 4 months before that point in time. And we've created an online tool. It's called Pickle. Everything's a bit Salad related here. It's Pickle-Money. It's available to everyone to download on the App Store and on the Google Store. And we point customers to that app, both our accepted customers and also our declined customers, so that they can understand exactly what we're seeing on their income.
And if we look at accepted customers, your existing loan book,
Sure.
what kind of trends are you seeing in terms of difficulty and current trading, if you like?
So the book continues to perform well. I mean, clearly there are customers who do get into financial difficulty, and as I mentioned, that vulnerability piece. Our arrears run at around about 10% overall. We have an eagle eye on watching loan repayment in the first 3 months because we think that's a really useful indicator. And those rates have remained stable. It's fair to say that we're constantly looking at the credit rules. We're looking at the results from what we see in other parts of the lending sector. We are not currently at this point constricting our lending. I do believe, and we've talked about this, Jeroen, there is some form of a recession coming at a global level, but at a UK level as well. So we have some key KPIs that we're keeping an eye on, and one of those is obviously first month arrears, but also the performance of the book throughout the year. We're actually undertaking an external review through a company called Broadstone, who are doing a sort of stress test on the book, just to make sure that we can continue to perform as a business, but also that our customers aren't unduly stressed. The ability to see the difference between disposable and fixed income is key, and that is provided through open banking. But this monitoring process will also alert us as to any problems our customers may have.
Okay. In the offer document, you cite an interest saving that your customers can make on a salad loan versus the alternative.
Sure.
Now, it could be said, and this is a sort of hot topic, that the APR that Salad charges is still relatively high. Could you sort of address that issue?
Yeah.
And perhaps visualize it over the next 3 years as it pertains to Salad? I think there is mention that you have an aspiration of APRs going down. Can you just talk us through that?
Well, let's start with the APR. So we've got products ranging from 59.9 up to 79.9. We are by far still the lowest cost provider in the sector, and that's the subprime sector. We can see where our customers are borrowing from, and that's not a reason to have an APR at 59 to 79, but we can see that our customers are typically accessing products at 1200% APR. And in fact, on our website, you can see the interest savings that our customers have and benefit from. So the costs in this business are predominantly the cost of borrowing, which is high. We use an external non-UK funder for that. We have a very slim team. There are 37 people who work within Salad, so it's quite a small number. You've also got an impairment provision, which we need to have in place. That's about 11% of all loans that are ever written. And depending on how the book performs, that's fed back into the business. But the cost of our APR is an indication of the people that we're serving, the impairment provisioning that we need to make, but also the cost of the funds into this business. It is our aspiration at size to bring our rates down. And quite clearly, in line with what Chris Woolard from the FCA said many years ago, there is a real opportunity here for a mid-cost credit provider. We don't think our rates will ever get down to sort of 29 or 39, but I'd like to think that we can get at least to 49. And at scale, we can go back and hopefully get funded by UK banks who totally accept that we've taken the toxicity out of lending in this space. And I think in the past 6 years that I've been doing this, there has been tremendous engagement from some of the high street banks, recognizing that we're using their data to lend to their customers. And certainly as a result of the Access to Credit Subcommittee, which I sit on, we've had some really interesting conversations with banks. APRs are not a great indicator of the cost of small sum lending. And I think when I speak to people, they sort of compare mortgages at 3 and 4% and credit cards at sort of 29%. as being sort of like the norm. But what you have to realize is the customers we're serving are outside of that, and we have to provision. And it has been a difficult journey to bring funders into this sector. And that's something that we're going to continue to fight to do. And overall, we believe that we can get our interest rate down.
What are the big hurdles that need to be overcome before you do get really serious wholesale funding, the type of which we see at CDFIs in the US, for example?
Sure. The CDFIs obviously benefit from the Fair Banking Act in the US. I think there's some resistance, that's putting it quite mildly, some resistance from UK banks to contribute to a similar piece. There is a Fair Banking Act movement that's being discussed in this country. I think it's quite a few years off coming into fruition. However, at scale, the banks will definitely start to be interested in funding our sector. We've got a current book which is around about £60 million at a sort of 100 million plus, which we hope to be at within certainly the next 8 months. We can go and get wholesale finance. We still, however, need the junior portion of capital to fund that. And typically, in conversations we've had with the UK banks, they've been looking at advance rates of around 65 to 70%, which means we'd have to have 30% of junior capital. The business just isn't generating that at the moment, but it will do at scale in certainly the next 12 to 18 months.
Yeah.
I mean, the whole thing about this sector, Jeroen, is we need to be sustainable. And we need to offer, a sustainable path for the business, which means that we have to build a book to in excess of around 100 million.
So we've talked about APR, and you've sort of described that very well. There are also people who question, well, obviously this bond is attracting an interest rate of 9%.
Sure.
I mean, isn't that very high in the context of your customers and the people that we're trying to help?
It is high. We believe it's a risk-weighted return for the bondholders. It is something that the company can currently sustain. The cost of funding is 14% that we have at the moment. So we believe it's the right return for customers for lending into this sector.
Yeah. Something I forgot to mention was, and is mentioned in the offer document, the unclaimed benefits.
Sure.
that you help people access. Could you say a little thing about that?
Absolutely. So it's about 3 years ago that ourselves and Scott Cash, a sadly now defunct CDFI in Glasgow, pioneered the use of in-application benefit checking. We have been amazingly successful at this process. So everyone that applies to Salad, if we can see the presence of benefits and we understand that they may have some entitlement, we will identify that to those individuals. There have been some amazing case studies. Have a look at YouTube. We've done some videos with some customers. We've identified, I think it's somewhere in the region of £23 million worth of benefits in the last 6 months alone. It's a widely adopted process now. Other people think they pioneered it, but it was myself and Scott Cash. But it's now being used. Lloyds Bank offer it within their banking app. So it's a really great place with open banking to identify this. And we believe that there's more work that can be done in that area.
So, I mean, turning to your bond, how it's obviously a 5-year bond with an interest rate of 9%, which is paid annually. How will this be repaid?
So it'll be repaid as a bullet amount at the end of the 5 years. We've done all the cash predictions that mean that's possible. Not possible, it's actually going to happen. And all of that is factored into the very extensive cash planning that we have done.
And will that be a refinance, or will it be repaid organically, if you like, because you're a bigger organization?
We're a bigger organization and that will be repaid organically. We're not looking to roll it over. There will be, I mean, this is our now third offer with Ethex. The previous two went very well. But yeah, all of that has been factored into our cash flow and we're performing ahead of our cash flow at the moment.
There don't seem to be many questions, Tim. So unless you have any final words, I will wrap it up.
Okay, well, if there are any questions that come in afterwards that people can think of, then they can certainly email yourself. All I would say is we're very keen to engage with our bondholders through the journey, and we are going to be producing 6 monthly updates in a sort of newsletter style. But I'm very happy. I think we had a previous bondholder that came to our office in Brighton. We've got a call centre down in Brighton, and we were very happy to show them round. And if there was anything else that people wanted to know, on the website, there's a lot of information. So previous reports that we've done, our social impact report is there. That's an annual document which we publish. Our accounts are just about to be published at Companies House. So I would strongly urge looking at those. We've got a very interesting angle on complaints disclosure, which we're doing as well. I've seen a question come up there. We only give loans one at a time to a customer. You cannot have multiple loans as a Salad customer. So there's only one loan for one customer at any point. So we'll re-lend to a customer if they've shown us 9 or 10 months worth of good behavior, and then we can look to increase that amount, and we also drop the interest rate down at each subsequent loan. Sarah Buxton.
So I think Sarah meant, how many loans do you offer at any one time? What's your total number of customers?
Total number of customers, 110,000 customers, 112,790 customers is the number today. We've got some very good dashboards, and we're lending around about £1,000, 950, I think, is the actual average amount that we lend. But we will lend from as low as £300 up to £2,000 with varying interest rates dependent on what we see in the open banking.
Okay. Good, and thanks for that question, Sarah.
And the other thing is, it's well worth having a look at our Trustpilot reviews. I'm incredibly proud of them. I read every single one of them, but have a look at the Trustpilot reviews. They give you an indication of the sort of people that we're lending to and the sort of troubles they have accessing credit.
I think your colleague Jamie was telling us in a few weeks' time we're going to be posting a couple of videos with some great examples of some typical customers.
Sure.
So we'll be putting that on our site then as well. So this 5-year bond is open to the beginning of July. It's another 60 days. And we're already almost halfway to our target. Anyone can invest from £100 and target a potentially tax-free return of 9%. As discussed, we'll be sending you updates on progress. So please make sure you're signed up to get emails from us at Ethex, and you can see how the offer is progressing on our website at ethex.org.uk. So on behalf of Tim and on behalf of Ethex, thanks very much for your time.
Lovely. Thank you.
Thank you.